Welcome to the Persian Horizon podcast, where we explore the ever-evolving landscape of business, investment, and innovation, particularly in Dubai and the wider MENA region. I'm your host, Moeen, and today we're delving into a topic that's on the minds of every entrepreneur, investor, and business professional operating in the UAE: the new corporate tax regime. This episode is titled The Corporate Tax Era: What 9% Means for Your Business in Dubai. Just last year, the landscape was different. We talked about zero corporate tax being a major draw for businesses setting up shop in Dubai. Now, with a 9% corporate tax rate coming into effect from June 2023, the conversation has shifted. I've been fielding questions from entrepreneurs, established businesses, and potential investors, all wanting to know what this means for their bottom line, their investment strategies, and their future in Dubai. And that's precisely why I wanted to dedicate this episode to unpacking the implications of this new reality. The introduction of corporate tax isn't just a financial change, it's a shift in the overall business ecosystem. We're moving from a tax-free haven to a more mature, regulated market, and understanding this shift is critical for making informed decisions. So, let's unpack what this 9% actually means for your business. First, it's crucial to understand that this 9% rate applies to taxable income exceeding 375,000 AED. This means that small businesses and startups below this threshold remain exempt. This is a deliberate move by the UAE government to continue fostering the growth of its vibrant startup ecosystem. If your business falls into this category, breathe easy. You can continue to focus on scaling your operations without the added complexity of corporate tax. However, for businesses exceeding the 375,000 AED threshold, the implications are more significant. A 9% on profits will undoubtedly impact financial projections and investment strategies. It requires a reevaluation of pricing models, cost optimization strategies, and overall financial planning. This is where expert advice comes in. Now more than ever, engaging with tax professionals is crucial. They can help navigate the complexities of the new regulations, identify potential tax optimization strategies, and ensure compliance. Don't view this as an additional expense. View it as an investment in your long-term financial health. This new tax regime also brings with it the need for robust financial reporting and transparency. Companies will need to maintain accurate records and adhere to stricter accounting standards. This might require investment in new software, training for your finance team, and even potentially restructuring internal processes. But seen from another angle, this increased transparency can also attract more foreign investment. A regulated market often inspires greater confidence in international investors, potentially leading to increased capital inflows. Another significant impact is on the free zones. Historically, free zones offered a complete tax holiday. While many free zones will continue to honor existing tax incentives for a specific period, businesses operating within them will need to assess the long-term implications and adapt accordingly. This might involve restructuring operations, exploring new licensing options, or even considering relocation. Now, let's talk about some actionable insights you can take away from this discussion. 1. Review your business structure. If you're operating close to the 375,000 AED threshold, consider strategic planning to optimize your tax liability. 2. Seek expert advice. Engage a tax consultant to understand the specific implications for your business and explore available optimization strategies. 3. Invest in financial reporting and compliance. Ensure your systems and team are equipped to handle the new reporting requirements. 4. Reevaluate your investment strategy. Factor the new tax rate into your financial projections and adjust your investment plans accordingly. And 5. Stay informed. The regulatory landscape is still evolving. Stay updated on the latest guidelines and pronouncements from the Federal Tax Authority. So, what does it all mean in the bigger picture? The introduction of corporate tax signifies Dubai's transition into a more mature and globally aligned economic landscape. It's a move that, while requiring adjustments, ultimately contributes to the Emirates' long-term stability and attractiveness to foreign investment. In conclusion, the 9% corporate tax is not a reason to panic, but a call to action. It's a call to adapt, to strategize, and to optimize. By understanding the implications, seeking expert guidance, and proactively adapting your business strategies, you can not only navigate this new era successfully, but also position yourself for continued growth and prosperity in Dubai's dynamic business environment. Dubai remains a hub of innovation, opportunity, and growth. The fundamentals that make it attractive, its strategic location, world-class infrastructure, and pro-business environment remain strong. This tax regime is simply another layer in its evolving narrative. I'm confident that Dubai and the businesses that operate within it will continue to thrive. As always, I encourage you to engage with the ongoing conversation. Share your thoughts, questions, and insights in the comments below. I'd love to hear from you. This is Moen signing off, and I look forward to connecting with you in the next episode of the Persian Horizon Podcast.